advance money received. Now let us see what happens in case, an assessee who actually wanted to sell a capital asset could not sell it because there were some disturbances or because there were some fall in the negotiations which was to happen. Let me first explain this to you graphically as I've been doing it earlier. So let's say A is the owner of a piece of land, right? There's a guy B who wants to buy this piece of land. Both of them entered into an agreement, okay, and B gave an advance of, let's say, 5,000 rupees to A. The condition was that if the sale does not happen, if B does not buy this, then this 5,000 will be forfeited by A, which means what? A is not going to return back this money to B, right? In this case, the question which comes up is, how is this 5,000 going to be treated for the purpose of A? What will be the treatment? So this treatment is governed by section 51, okay, which we will now see. So when is it applicable? Any capital asset, which was land in our case, was under negotiation for transfer but could not be transferred. So A was in negotiation with B to negotiate a transfer of this piece of land, but it could not be transferred, okay? And assessee received. Who is the assessee in this case? A, because he's the seller, he's the one who's received money, and retained. He did not refund it back. He retained this money with him. Any advance or other money in respect of such negotiation. So he got this 5,000 and he kept it with himself. In this case, section 51 is applicable, right? What are the consequences? What are the applications of this? Money retained above shall be deducted from the cost or written down value or the fair market value of the asset in computing the cost of acquisition. So let's say, for example, the cost, okay, let me just go back to the same thing here. In this case, let's say the cost of acquisition of this asset in the hand of A was 50,000, okay. Instead of taxing this 5,000, what will happen is the cost of acquisition of A will now be treated as 50,000 minus 5,000 or 45,000, right? So your cost of acquisition will be reduced by 45,000, right? In cases where the written down value is, so for depreciable assets, this will be reduced from written down value. For normal assets like land, it will be reduced from the cost. And in some cases, where the cost is treated as fair market value, in those cases, it will be reduced from the fair market value. Okay, so idea is basically instead of taxing him on the receipt of this money, this is reduced from the cost of acquisition. Wherever you have different cost of acquisition, you will consider it accordingly. Now the third thing is, what if the money retained exceeds the cost? Okay, so let's say in this case your cost is 50,000. Okay, let's say the money that you get is 5 lakh. Then what will happen? In that case, basically, the deduction shall be to the extent of cost, written down value or fair market value as the case may be. So if your cost was 50,000, out of 5 lakh, this 50,000 will be reduced to nil, right? And if the money received is excess, it shall be a capital receipt not chargeable to tax. So the balance, which is 5 lakh minus 50,000 or 4 lakh 50,000, this will be a capital receipt which will not be charged to tax in the hands of the assessee, right? So I hope the concept is clear with you. You may try some questions, practical questions in whatever books you are using to understand this more deeply. And we'll also put in some more practical questions on this aspect.